What is up, YouTube? Today, we're going to be getting into how to properly use SMT divergences to help improve your trading for the better. Let's get into it. All right, so what is an SMT? An SMT, or a smart money technique, is an ICT concept where two correlated pairs, such as NQ and ES, do not make the same price move. It is otherwise known as an SMT divergence. Okay? So you can use SMTs to help you identify timing for reversals and give you confirmation for your trade entries. Let's get into an example. All right. So on my screen is a bullish example of an SMT divergence. So we're just going to pretend that the left side is NQ and the right side is ES. Okay. So let's say we're looking to take longs out of some type of higher time frame PD array. That could be in FEG, liquidity sweep, order block, you name it, okay? So let's say we see price starting to pull back into a higher time frame PD array, and we say NQ have some sort of retracement, right? And then NQ goes lower and then takes out this most recent low, all right? Now, if we move over to ES, we'd see that ES also moved lower. We had the same pullback, but ES failed to take out that low. This would show us that there is an SMT in the market, okay? And this gives us a clue that smart money is currently manipulating the price after taking out one of those lows and leaving the opposite correlating pair above the lows, okay? So let's get into a actual chart example on how you can use this properly. So I'm on the 4-hour time frame on NQ, and I'm going to be going over a bullish example on how you can use an SMT divergence. So as you can see in this 4-hour price leg, it is currently bullish. So let's say we were trying to look for some sort of longs and we're just waiting for a retracement. So as you can see, we had some sort of minor pullback and price had moved through this 4-hour fair value gap. So we wouldn't be looking to take a trade out of it. So instead, let's scale down to the 1-hour time frame, which this is still considered a higher time frame PD array. And as you can see here, all right, on the left side, price is respecting our higher time frame bullish PD arrays. All right, so now that we see that price had retraced into this 1-hour PD array, we can look to take some type of long entry out of it. So now this is where the SMT divergences come in to help you time your entry. All right, so what we're going to do is we are going to scale down to the 1-minute time frame. All right, so all I'm waiting for is to get our SMT and then an inversion out of it, right? But before we get into that, I'm going to show you how a lot of people, they get this wrong. So most people think they're supposed to do is they're just going to wait for the retracement. And as soon as they get that move into that 1-hour fair value gap, they're going to take either some type of inversion entry, CISD, whatever, right? And the problem with this is because there was no SMT to confirm the reversal, now they aren't putting their stop loss at any kind of protected low. So price could easily come back, stop them out, and then run in the same direction. And this is the way that you can stop that from happening. All right, so here I'm gonna go back up to the 5 minutes, so it's just a little bit easier to see. What I'm gonna wait for is see if we can get some type of SMT between NASDAQ and ES. All right, so I'm gonna wait for price to get close to this low. As you can see here, we are going to move over to ES and see if price has taken out that low. So not yet, and boom, okay? So as you can see here on ES, price had taken out our most recent low, but if we move to NQ, you can see that price had failed to take out that low. So this shows us a cracking correlation in market or a bullish SMT divergence, and it shows that smart money is currently manipulating and gearing up to start a reversal towards the upside. All right, so after I see that, then that's when I'm going to be looking to take my entry. Now, it's all personal preference, okay? You could always take the entry on the pair that swept. Personally, I like to take my entries on the pairs I am most comfortable with, right? And it's totally up to you, right? So you might be the person that says, "Oh, okay, I don't really care. I'm gonna always take it on the one that swept," or you could be like me and usually only take it on NQ. So after we get that SMT, all I'm waiting for is just that first 1 minute inversion out of the gap. I'm waiting, and boom. All right. So as you can see here, our SMT is still intact. This low is still intact and it hasn't been swept out. All right. And after we get this 1 minute inversion, we look to take our entry. But one other thing that I like in this trade is I see that we had this internal sweep, right? Other known as an inducement. And this gives me another strong confirmation that price is going to move higher, especially when there's no close above that low. So we take our entry here, we place our stop loss below the low, and then we target the extreme of our most recent leg. Okay. So the reason that we're going to place our stop loss below this low is because it is now protected. Due to there being an SMT there, we expect that price is not going to continue lower and take us out. All right. And let's see how this trade plays out. And boom, we hit TP. Now let's see what type of RR we could have caught on this trade. And here, as you can see, we caught nearly a 1-to-4 risk reward. Okay. So usually most of my trades are have a smaller risk reward than that because personally I'm just looking for base hits and I found that that works better on prop firm challenges because of the strict time error that they make you pass the challenges in. But as you can see, this is still an amazing risk reward and I consider this a base hit, right? But let's say if you were someone who was a little bit more ballsy, and personally, I would not recommend this, so you can, maintain that higher win rate. But let's say instead you wanted to target the extreme of the higher time frame leg here, right? Which was all the way up here. And this would give you nearly a 1-to-16 risk reward. Let's see how this plays out. And boom, you end up hitting TP. All right. So this is a very rare case where this happens. But as you can see, the SMT gave us a specific time in which we could have entered the market. And all we were just waiting for was that entry. And you can see the type of reversal that we got. And it ended up giving us possibly a 16 hour or more if you would have continued to hold it. Thank you all for watching. And please let me know if there's any other topics that you guys would like me to cover. Just let me know down in the comments and I'll be happy to make a video on it. Please like and subscribe and turn on the notifications, and I will see you guys in the next video. Have a good one.